Hi everyone, this is Victor from Crush Crypto. Today we have Graeme Moore, the VP of Marketing at Polymath, and he's going to share with us what's going on with the project and what their plan is in the next couple of years. Hi Graeme, great to have you here.
Thanks, Victor. It's great to be here.
My pleasure. First of all, for those who may not be as familiar with Polymath, could you briefly explain what the project is about? What do you guys do?
Yeah, Polymath is the securities token platform. So what that means is we're trying to make it very, very easy for somebody who's looking to issue a financial security to be able to create that financial security. And the interesting thing is that these securities that these companies are creating are tokens that are on a blockchain. So we're essentially changing the financial system to one where a financial security is represented as a piece of paper to one where it's a token that exists on a blockchain. So there's a lot of benefits that come with that. Increased liquidity for shareholders as well as founders in the company. Trade fees to securities will come down dramatically. You can essentially over time assume that if atomic swaps come to fruition to all of these different tokens, that you can get trade fees of financial securities down to zero over time. There's increased automation that you can do with all of your back office functions that you would normally do for securities. And then there's a whole host of other benefits that I won't get into right now. But we're really excited about what we're building, making it easy for people to create essentially the future of what a financial security is.
Cool, that's very interesting. Cool, that's very interesting. So I know there's been a lot happening at Polymath recently. The mainnet has just launched a few weeks ago, and there's a lot of updates in terms of product releases. So could you tell us what's been going on with the project?
Yeah, so you're exactly right. I think it was about 3 weeks, maybe 4 weeks ago, that we went live on Ethereum mainnet with our dApp. And so, I mean, what that means is now anybody in the world who wants to create a financial security, and let me caveat this by saying you should speak to a lawyer before you create a financial security. But anybody in the world who wants to create one can come to the Polymath dApp and in about 10 minutes time, create their own security token. And so what we've been working on over the past year is making security tokens a reality. Right. And so you can't use ERC20 tokens for financial securities. And ERC20 is the token standard that essentially fueled this ICO boom. And the reason why you can't use them is because in the ERC20 token standard, there's nothing that restricts the transfer of tokens from unauthorized parties. So let's say you're holding one of these tokens, it's an ERC20 token, and you want to send it to your friend. Right. There's no restrictions whatsoever on you doing that. But in the world of financial securities, that's a very big no-no. And so what we've been building over the last year is making these transfer restrictions built into the tokens and into the protocol itself so that you can actually use blockchain-based tokens as financial securities because they're going to be coherent with regulations and regulators are going to be happy with these things.
Right. So you guys are going to help the issuers in terms of facilitating the token issuance.
Yeah, so what we help is, and I actually recommend anybody who's interested at all in financial securities or blockchain technology or dApps built on Ethereum or just dApps in general to go check out what we've built so far. So it's tokenstudio.polymath.network. And you can see what it looks like. So there's a couple pages that come up that say, oh, okay, you're issuing a security. What do you want your token symbol to be? So what do you want your, I believe it's 3 characters to 10 characters. What do you want that symbol to be? Victor, what would your token be if you created one?
The Victor Lie token, I guess.
Okay, there we go. Okay. Yeah. So you come to the platform, you reserve that token symbol, and you fill in a little bit more information, and then you're kind of off to the races. And then one of the next pages is, do you have a legal firm who's helping you do all of your legal work? No? Okay, well, here are some that we recommend you reach out to. Do you have a KYC provider who's helping you deal with all of the KYC needs you have in this issuance? No? Well, here are some that we recommend. And so what we've built at Polymath is this ecosystem of all of the parties that an issuer might want to reach out to that can help them with their issuance. And then once you've talked to all these parties, you have your legal in place, you've got your KYC set up, you've talked to somebody who might help you custody these tokens afterwards or might help you custody the funds you take in when you're raising money, then we get to the token creation part. And that's surprisingly, you probably wouldn't think it, just based on all these restrictions that are built into these tokens and how complex the technology is. It's actually very easy to do. So in a few minutes, you can essentially select, okay, yeah, I want my token to be divisible, or I want it to be indivisible. Here's how many I want to create. Here's the address where they're going to. Okay, let's create these tokens. So it's actually a really simple process to do, and we're really excited about the fact that we've released this, because there's honestly, it's kind of sad to say, I mean, it is coming, and we do have a lot of faith in the Ethereum community, but there aren't that many dApps that have been launched yet. So we're really excited to be part of that I guess I would say special group who's launched a functioning dApp on Ethereum mainnet.
Right. So there's a lot of things happening. Your dApp has launched in the mainnet 3 to 4 weeks ago, like you said. So I'm just wondering, how much usage has there been so far, and how many companies or assets are using your platform to issue their security token?
Yeah, we've been talking to thousands of companies.
Thousands.
Over the last year, we've been talking to thousands of companies. In terms of companies that have actually created a token since we went live on mainnet, I believe right now the number is 57.
57.
Yeah, so 57 companies have created tokens.
Okay.
Sorry, let me say that again. 57 companies have reserved tickers.
Okay.
That's what 57 companies have to do. As far as creating tokens, I think right now we're at, I want to say 6, maybe 7.
Right.
So there is some traction, and we're really excited about it. And the cool thing is that, I mean, these are actual financial securities that people are creating, right? So it's not just, oh yeah, hey, I think I'm going to go create a utility token this weekend, or hey, I think I'm going to go create my own cryptocurrency and see if any of my friends want to buy it and we can send it around. Right? Like these are instruments that represent actual ownership in something else.
Right.
So we're talking to legitimate companies that have real assets in the millions of dollars.
Right.
And
so these tokens are actually backed by some kind of assets.
Correct. Yeah. So I mean, you can structure securities in a number of different ways, but you could have a derivative that isn't necessarily backed by something, but it's tracking the price of something else. But yeah, what we're working on mostly right now is equity in companies and shares in funds. Right. So at the Blockchain Futurist Conference a couple weeks ago, one really exciting thing that we actually did live on stage was we created the token for a company called 7Pass. And so
you mean live during the presentation?
Yeah, we did. So I did it. Cool. I was up in the rafters with the audio visual crew up there, and I was sweating. I was like, oh my gosh, please MetaMask work, please Ethereum miners mine this transaction. Nice. And so I was pretty nervous, but it ended up working. And so we created the token for this company called 7Pass, and they're a fund. And so we created a token that represents an actual ownership interest in this fund that they have. And so, I mean, like, that is very big for us. The fact that we've created an actual financial security that a company is going to use, and it's going to exist in the world. I mean, like, we're working with, and actually we announced on stage, another 4 companies that we're hoping to create tokens for that'll go live in the next 90 days.
Right.
So kind of by the end of the year, we're hoping to have at least 5 tokens that exist out there in the wild.
Yeah, right. And I also saw that you guys have a blog post saying that there are 5 STOs raising a total of $210 million. So that's really exciting.
Yeah, I mean, again, like, I should caveat that and say that's what they're looking to raise. I mean, we'll see if they're able to do that, but I mean, that's kind of like their stated goal. That's what they're trying to do.
Right.
But the interesting thing about that is, if they're successful, that doubles the market cap of security tokens.
Right.
So, I mean, the market cap of security tokens right now is, I think there's like 3 or 4 that exist. It's between $100 and $200 million. So if these 5 companies that are using Polymath are successful, that's going to double the market cap of security tokens. And so that's incredibly exciting. And once we show that this technology works, it doesn't break when you send the tokens around, it actually restricts transfers only among authorized participants.
Right.
Other people are going to see that, and they're going to go, wow, this is a real thing I can use for my business. It increases the liquidity of my financial securities that my investors have. I have more transparency in who's holding my shares. Trade fees go down. I mean, companies are going to go, wow, this is actually a real technology that companies are using and it's benefiting them, so I'm going to do that too. And so we think once these first 5 issuers that we're working with kind of come out of the gate, that's when we really start to see the snowball. It's kind of starting to pick up size and roll really fast, and we're going to see a lot of companies starting to issue security tokens.
Yeah, that's really encouraging for sure. And because security tokens are very localized and they're different in each jurisdiction, can a security token, let's say the one that you did in your presentation, is it purchasable by everyone, or is it just open for certain people in a specific jurisdiction?
Yeah, so that company, I don't want to speak for them, and I'm not 100% sure if they're finalized on exactly what investors they're going to allow and disallow. But what I'll say is that you're absolutely correct. I mean, the web of financial securities laws that exist are absolutely insane, and it's incredibly hard to navigate, and that's why securities lawyers make so much money. It's because these things are really confusing. You're generally dealing with many different jurisdictions, and it's really hard to make sure that you comply with the rules. And so what we've built is the mechanism where the company who's going to issue these securities, they talk to their lawyer or their lawyers. They might have a team in different countries even, and they might say, hey, okay, these are the restrictions that we need to build into this token. And then they come to the Polymath platform and they go, okay, yes, check this box, don't check this box, check this one. Okay, cool. And then their KYC provider that they're working with decides who is allowed to purchase this token based on the information that is in the offering documents.
Okay.
So sometimes it will be only United States accredited investors who are allowed to hold these tokens. Sometimes it'll be people only in Canada. Sometimes it'll be people in some European countries. Sometimes it'll be only accredited. Sometimes there will be accredited investors, but there will be some non-accredited investors allowed. So it completely depends on the specific offering, and it completely depends on the jurisdiction. So there are a ton of different ways that these offerings can be different from each other. And so it's not really like, oh, you have a Polymath token, that means it's for US people. It's no, Polymath has created a protocol so that the issuer can decide what restrictions they need to have in their token, and then it can work in whatever jurisdiction because it can work with whatever requirements they have, and whoever's not allowed to hold it. Just like I feel like I'm kind of rambling on.
So it's completely up to the issuer in terms of what they want to do.
Yeah, 100%. I mean, it's up to the issuer to also remain within the bounds of securities law, right? So sometimes they might say, "Hey, let's make this token available to everybody," but it's but then the SEC will say, "Hey, you can't do that, and here's a really big fine," right? So yeah, it's up to the issuer in terms of what kind of offering they want to do, and then they just have to make sure that they operate within the bounds of whatever structure that offering is.
I see. That makes sense.
Right, that makes sense. So far in our discussion, we have been focusing on the token issuance side, and I'm also interested in what happens after the tokens are issued. What about the listing of these tokens on exchanges and the trading of these tokens on the secondary market? Do you guys help facilitate in any of these things?
Yeah, I'd say what we're helping to do with that today is we're building this protocol that makes sure that all of the trading that's being done is regulatory compliant.
Yep.
And so we do not have an exchange today that we have built, but what we're doing right now is we're partnering with exchanges. And so one that we're really excited about is Open Finance, and Open Finance Network right now is the only security token exchange that is live and actually trading instruments.
Right.
And so what we're doing with Open Finance is we're saying, hey, let's make sure that your technology is completely compatible with our technology, so that when we help all of these hundreds of thousands of companies create these security tokens, they have somewhere where they can trade in the secondary market, and the tech is going to work seamlessly. An interesting point that we kind of like to talk about, it's pretty funny. We're actually the single largest shareholder of the Barbados Stock Exchange.
Okay.
So, I mean, when you think of Polymath blockchain technology, you might not think of the Barbados Stock Exchange, which has a daily volume of something like a couple $1,000s per day, right? But the idea there is that you can purchase an already existing exchange that has all the necessary licenses, they understand regulations, they understand what stock trading is all about, and then you can plug in this new technology into that existing exchange so that that exchange is able to trade security tokens. And so that's kind of another venue we're seeing, and another route that a number of other players are taking and saying, hey, let's just work with already existing exchanges that have all the regulations, they have all the licenses in place, and we're going to plug our technology into there. And so that's another thing that we're pretty excited about.
Cool. So just now you mentioned that the security tokens market is very small, and I'm just wondering why that's the case. What's the biggest barrier for issuing security tokens right now? And why are there so few security tokens trading right now?
It's because Polymath has only existed on mainnet for 3 weeks. So I think that honestly it kind of sounds like I'm kidding around, but I totally think that's the answer.
Right.
So the reason I say that is because Trevor Kavirko, who's one of the co-founder and CEO of Polymath, I mean, he was thinking about all these interesting token ideas a year and a half ago before he started Polymath, and he was saying, hey, I want to make this really cool token that pays dividends and it does all these cool things. And then he realized, oh, that's a financial security. And he went, you know what, I don't really want to get into the whole securities laws of everything. I don't really want to have to deal with that kind of stuff.
Right.
And it's also just really hard to create, right? Like, how do you create a token that restricts transfers automatically at the protocol level to ensure that only authorized investors hold them, right? And how do you have secondary market liquidity with these things, right? And it's just the technology and the ecosystem and the infrastructure wasn't there at that time. But today it is, right? So you have Polymath, which you could think of as kind of like the origination platform or the financial printer of these financial securities. And now you have these secondary liquidity players like Open Finance, like T0, which is coming online, like the Barbados Stock Exchange, which will eventually be coming online. Now you have this ecosystem of participants that allow you to go from start to finish in terms of creation and then secondary market liquidity. And you're also seeing all of these other players come up right now, like Vertalo, for instance. So we have a partnership with Vertalo. They're very focused on reporting and making sure that issuers and their companies are compliant when they're in the secondary markets and when they have follow-on offerings and when they have to do continuous reporting. There's custody agents. So we recently announced a partnership with Prime Trust. Prime Trust is an SEC qualified custodian. So you can actually have your security tokens or your cryptocurrency stored with an SEC qualified custodian. And so all of these players and all these ecosystem participants are now online and working and able to be used. So I think it's really just a matter of time of a couple companies issuing security tokens, people seeing the benefits in terms of they're way easier to trade and there's much more liquidity than you would have with a piece of paper. And then it's just those companies telling the world, hey, we did this, it works.
Right, that's very exciting for sure. So I guess with security tokens, pretty much any asset can be tokenized, and this can potentially expand the entire cryptocurrency market by many orders of magnitude. And right now, for the ICO market, people mainly contribute to these projects using Bitcoin or Ether. And I'm just wondering, for security token offerings or STOs, is that still going to be the case, or are people going to use some other forms of currencies like fiat or maybe some form of stablecoin?
I think we're going to see a number of different things used as currencies. I think Ether will still be used. I think Bitcoin will still be used. Interestingly enough, one of the companies that we're working with that's in that first batch of 5 we talked about is a company called Coral. And so Coral is actually going to be the first ever company to go public through issuing a token. So they're actually going to become a public company that's subject to all of the reporting requirements, all of the regulations, all of the rules. And so they've been taking a very long time making sure, okay, are we 100% compliant, talking to regulators every single day of the week, making sure that everything's okay. And so Coral is going public through this token, right? And so they're becoming a public company. And sorry, what are we talking about? I just kind of blacked out and I was thinking about
I was asking what's the currency used for contributing to STOs?
Okay, there we go. So Coral actually announced very recently that they're going to be accepting Poly, which is our native utility token, as a form of funding mechanism. So you can contribute to purchase Coral tokens using Poly tokens. Right. And so I think we're going to see the same kinds of tokens, utility tokens, cryptocurrencies. You can call them a whole bunch of different names if you want. We're going to see a bunch of different ways that companies are going to use to raise capital. Because at the end of the day, what companies want is they want funds so that they can go buy things. They want funds so that they can go hire people. They want funds so they can get office space. All these things. I don't think companies really care the mechanism in which they receive, let's quote, money. I just think they care about getting it, and they're willing to accept it in a variety of different forms. So there's also going to still be companies that use fiat. I mean, you could contribute to some ICOs with fiat. And I mean, that was supposed to be only on the blockchain. Ether is the currency of everything, right? But companies were still saying, hey, you know what? Yeah, we'll take US dollars. We don't care. We just want money so we can go do stuff. So I think we're going to see a number of different funding mechanisms used. And right now on Polymath, if you're going to use the STO contract, the security token offering contract that we built, you can either select to raise funds in ETH or in Poly. Those are the two currencies, the two utility tokens that you can use right now to raise funds. Other than that, you're kind of on your own in terms of manually having to give your investors tokens based on the amount of money you take in. But if you use the contract, you can take funds in an ETH or Poly, and it's completely automated, just the same way that ETH would be in an ICO.
Right. That's really cool. And I'm curious as to the demand of STOs. For people interested in buying these tokens, are they mainly existing cryptocurrency users, or are they more from the traditional institutional investor side?
It's actually really interesting. I think we're seeing a very cool mix of both right now. So Coral, which is the company I was just talking about, they have a really strong base in the cryptocurrency community. They have a really strong community, and they have a lot of people who are looking to contribute to their funding in crypto. By contrast, 7Pass, which is one of the other companies that's looking to use the Polymath protocol, I believe, as far as the most recent conversations I've had with them, things might change, of course, but I believe they're only going to intake fiat. And so there's this really interesting mix of diehard cryptocurrency people who have held Bitcoin and Ether over the last, let's say, 4 or 5 years. They've made a lot of money, and they're looking to diversify into holding assets that are real. But they still love blockchain technology so much that they're going, well, I don't want to put money into my Charles Schwab investment account. I don't want to go back to the world where I have to deal with all of these like very bad interfaces that I have to deal with. I don't want to have to call a broker or something. And so they want to stay in the world of blockchain, but they want to hold assets, or they want to hold tokens that are backed by actual assets. And then there's this other side of people who I would categorize as being investors in the traditional world, but they're tech savvy, and they're very interested in blockchain technology, and they see the benefits that security tokens have over pieces of paper. And they say, if they're looking at two offerings that are essentially identical, let's say they have the same amount of revenue, they have the same amount of growth, they have a very similar industry, and offering A, you get a piece of paper, and offering B, you get a blockchain token that you can trade much more easily. Investors are starting to see that option B is a viable alternative. And I think what's going to happen over time is that option with security tokens is going to become the default for most investors, especially for private offerings, because just the benefits of security tokens over paper is astronomical, and investors are starting to wake up to that.
Yeah, for sure. And especially right now, only large companies can get listed on stock exchanges. And with the issuance of security tokens, more assets can potentially be tokenized.
Yeah, 100%. I mean, like, it costs a lot of money to get listed on the New York Stock Exchange, and then you have to pay continual fees every year to stay listed on the New York Stock Exchange. You have to do a lot of requirements in terms of disclosure documents every quarter. I mean, like, it is, from most people's standpoint, a headache to be a public company.
For sure.
Right? But if you can have a liquid secondary market restricted to 2,000 investors, which is what the majority of Reg D offerings, the limit is you can have 2,000 investors. Like, why would you ever be a public company if you can have a liquid secondary market for your shares just with a constrained number of people. You don't have to deal with the reporting requirements. You don't have to pay the New York Stock Exchange or NASDAQ hundreds of thousands of dollars. I mean, it just makes a lot of sense for most companies, and especially the ones that we're talking to.
Right, for sure. And my next question is about dividends. How will dividends be paid out? Are they going to be paid out in ETH or in other currencies?
Right now, as far as the Polymath protocol goes, so as far as the ST20 standard, as far as the security token standard, we're now calling it, dividends can be paid out right now in ETH or any ERC20 token.
Okay.
So a company can actually do some interesting things and decide, okay, we're going to pay this class of shares a set amount of ETH. Doesn't matter its relative value to US dollars. Or we will pay a set amount of US dollars in dividends, so the amount of ETH will fluctuate. Or like they can do a whole bunch of different combinations that weren't really possible before, or at least weren't easy. And so some investors might prefer more risk in terms of what dividends they're getting paid out, and maybe they want a more volatile utility token to be paid out to them. Maybe they only want ETH. And so we're actually giving issuers more room to experiment and see what their investors really want.
Right. So I guess for the issuers, for example, if they make money, their profits will need to be converted from fiat to cryptocurrency before they can be paid out to the holders.
Correct. And I mean, again, so that's if they want to take advantage of blockchain technology's benefits. They might not want to. They might only have 5 shareholders, and they all work in the same office. And so they might get together and say, hey, are you guys cool with, we're just going to pay out dividends in US dollars? And they'll say, yeah, sure, that's fine. Right. And so again, it's completely up to the company. However the company wants to run its own business, we don't tell them what to do, but they do have the advantage of using blockchain technology to pay dividends out automatically in crypto if they want to.
I see. Got it. So I know you guys own 2 domains, tokens.com as well as securitytokens.com. I'm sure these 2 domains are both very highly sought after. So I'm just wondering, what do you guys plan to do with these 2 domains?
We are squatting on them until we can flip them for 10x. No. So right now, the idea of securitytokens.com is to build it into something that resembles CoinMarketCap, but for security tokens. So a place where people can go to find all of the security tokens that exist, find their market caps, find their price of the day, their performance over the last week, last month, last year, whatever. And so that's the idea of what we're going to eventually transform it into. It's not really something that we're dead set on making sure we build right now, because it would be a pretty boring site with 4 security tokens. So that's something that we're looking to really build out and really get people engaged with. I think I saw CoinMarketCap, maybe it was 6 or 7 months old now, but I mean they were a top 100 ranked site worldwide, and so
they're a very popular website.
Yeah, and so we're looking to do the same type of thing with security tokens instead of utility tokens.
Right, for sure. So in the stock investing space, there are stock screener websites where you can filter stocks based on different metrics. For example, dividend yield, PE ratio, revenue growth rate, and things like that. So if you guys could do something similar on the security token side, that would be very useful for investors.
Yeah, Victor, you released our secret info early to the world. But yeah, like that's the idea, is just get more complex, more granular, giving people the tools that they want in order to analyze financial securities.
Cool. Yeah, that's very interesting. So last question for you. Where do you see Polymath 1 year and 5 years from now?
1 year from now, so that's 2019, end of August 2019. I see Polymath as the de facto place for anybody looking to issue a security token. So anybody gets in their head, hey, this blockchain technology thing's been going very well since 2009. Shout out to Satoshi, obviously. So this blockchain technology thing has been going well, and security tokens have now been going well for a year. I'm going to Polymath. That's where it makes sense to create my security token, because that's where everybody else has been creating their security tokens. That's what I think in 1 year is going to happen. Also in 1 year, if I'm going to make a bold prediction, I would say there's going to be $1 trillion of security tokens.
Wow.
That won't necessarily be all created by Polymath, but there's going to be $1 trillion of security tokens
just 1
by
year
the
from
end
now.
of 2019. That's my prediction. And I mean, it sounds crazy, right? Like the utility token market cap or the crypto market cap reached something like 800 billion. And so I'm saying, yeah, security tokens are going to be bigger than that in 1 year. But if you look at the amount of financial securities that exist in the world, it is insane, right? So if a few really big buildings and a couple wealth funds tokenize, that's $1 trillion. Right. So it's not that insane to predict that there's going to be $1 trillion of security tokens in 1 year from now. I really don't think that's that big of an estimation for 1 year from now. And then, 5 years from now, that's like 38 years in the blockchain world. But 5 years from now, I see Polymath as the de facto place to go to issue a financial security, period. So what I'm thinking is 1 year from now, oh, you're going to try out this security token thing? Yeah, it seems to be working well. There's a lot of benefits over a piece of paper. Okay, yeah, we're going to go to Polymath. But then 5 years from now, there isn't even the thought in anyone's mind of giving their investors a piece of paper.
Yep.
And so that's what I want Polymath to be, and that's what I think Polymath will be in 5 years.
Right. So the traditional equities market and stock investing could be totally disrupted by STOs.
That's what I think is going to happen. And I mean, we're seeing all of the signs that it's going to. We're seeing a lot of very prominent figures in the blockchain world and even in the financial world saying, you know what, this is probably going to happen.
Right.
So a lot of big companies are starting to take notice. Companies they're putting out announcements pretty much every single week. You can find a new one saying, oh, looking into trading digital assets and security tokens. So I mean, the big players are starting to wake up to it. And I mean, I think we're going to be light years ahead of them by the time they actually figure out what's going on.
That's really cool, man. Thank you so much, Graeme, for taking the time to speak with us today. I really appreciate it, and I also really enjoyed our discussion. Thank you as well for watching our interview with Polymath. If you haven't already, please subscribe to our YouTube channel for our latest interviews and videos on various projects and cryptocurrencies. See you next time.
Thanks, Victor. Have a good one.
You too.